Hi there, Amy here with your end of year market update for Stanislaus County. Honestly, it was a very challenging year for both buyers and for sellers. We started the year really strong with interest rates at a low of 3%, and we saw 11% appreciation by April, just to see the pendulum swing back down as the rates went up to 7% and buyers' affordability was absolutely crushed. We saw prices coming back down, and we ended 2022 with a negative 4.5% price point for the year, which we weren't able to predict. So if you think about who wins and who loses, unfortunately, everybody loses in this case. We have a 4.5% price reduction, which hurts some of the sellers, and the buyers saw an increase in terms, and so their payments increased by up to 30%, so the buyers also lost. This began an affordability issue. So rents began to increase because buyers weren't able to afford to buy, so they had to stay in the rental market. And so the pressure in the rental market increased. As you can see in the CPI report, the cost of living has gone up. And then that led to a transactional recession because people could not afford to create these transactions. Now let's take a look at the numbers, and we'll dive in to see what it actually looked like, starting with inventory. Again, here you see the trend line going down on inventory, pending properties, and closed homes. That's a transactional recession. It's interesting when you see the inventory so low, yet you see the demand very high. But a lot of us buyers couldn't afford to buy a property because the payments went up by 30%, even if the property values did come down. So here you see the rates starting at the beginning of the year at 3.1%. We saw a peak in price point around April, and then we started seeing this rate just jump up. You saw the shock of 1.5 points, and then it jumped all the way up to 7%, which caused a halt to the market. On to the median price point. We ended with a 440. Again, this is that pendulum swings up. We're at 485 in April, and that was the peak price point. We saw it come all the way back down, which ended up being a 4.5% decrease in the price point by the end of 2022. So you saw the peak in April, but the rates going up, you started seeing the price go down month after month. 475, 469, 460, 447, 433, 430, and now we're at 420. However, we are seeing an uptick in activity since the rates did come back down. FHA rates are now at about a high 5 and conventional are at the low 6s. We'll see what kind of activity and information that gives us for January, but it seems a little bit gloomy right now. It looks like our crystal ball is a little bit more like a snowball right now. We can't really predict what's going to happen in the market, but what we do know is you'll start seeing those CPI numbers also come down, and you'll start seeing the rates come down as well. So we will see what that looks like in the first quarter of this next year. When it comes down to days on the market, not too much has changed for month over to month. Currently, we're sitting at 41 days. We're seeing a little uptick in the price point when it comes down to what a property is being listed at and what it's actually selling at. We're now at 95%, and that's probably because sellers are starting to be a lot more realistic when it comes to pricing. They're not doing as many reductions. They're doing more closing credits and helping buyers buy down their interest rate, using a little bit more for that negotiation power, which helps some of the payment affordability for the buyer. If you can get a solid credit with a lender to bring that rate down, you could potentially go from a 5.8% down to the high 4s, and that will dramatically increase the buyer's affordability. But it all comes down to your ability to negotiate, not always on the best price, but on the best terms for yourself as a buyer. Or if you're a seller, not wanting to give up some of your price, but giving up some credit, so that way you can negotiate a lower monthly payment for that buyer. Looking at the absorption rate, again, we're staying pretty flat. A normal market is 4 to 6 months. We're sitting at under 2 months of inventory. We did see foreclosures jump up a bit, but you're looking at 164,000 foreclosures in the U.S. compared to the 1.6 million back in the day. So we're still a tenth of what we used to have. So we're keeping an eye on that still. As the recession hits and some people will start losing their jobs, you'll start seeing an increase in foreclosures. So some people might say, hey, we saw 100% activity in foreclosures increase. But yeah, it makes sense because we're at the lowest we've ever been at. So it doesn't take much movement to increase by 100%. I mean, if you really look at pre-COVID, you're at 300,000 foreclosures average in the US. So we're still much lower a lot of people restructured their debt. So people through this 2020, 2021 market that reset their rates, and they were maybe able to get their 5% interest rate down to under 3%. They're actually in a much better position today. So their property might not be worth as much as it was at the beginning of last year, but they did lock in a lower payment. So a lot of homeowners right now are in a much better equity position and a better mortgage position. So they're a lot less likely to foreclose. So I think that's going to be a signal of strength for the housing market that's coming. The housing forecast, of course, you see a lower inflation rate, which equals lower interest rates. So you're going to continue to see a slowdown over the next few months. Incomes are increasing, which is helping affordability, and you're seeing a very tight inventory environment. So that again is going to be something challenging for a lot of buyers. Rents are still expensive and rising, so we'll see how this year will shape out. I'm going to keep you updated as much as I can every month, and I'll give it to you exactly how it is. But if you're interested in knowing how much your property's worth, or if you're a buyer wanting to see what options you have and what negotiation tools we're able to use right now to get you the best terms on your property, please don't hesitate to reach out, as I'm always here to help. Until next month, I'll talk to you guys soon.